Hey you guys, so it's Garlinda Price and I'm here at my office today. Y'all may see my besties back there in the background and we are plugging away. But I wanted to educate you on today about whole life insurance, because oftentimes when we're set up at like local events, people will ask us, well, what's the difference between term insurance and whole life insurance? And sometimes people genuinely don't know. And so that's what I want to educate you on really quickly. We're just going to do a quick little snippet on what is whole life insurance. And so whole life insurance is actually permanent life insurance. I have some notes I'm going to read from, so I may look down, right? But how do you create wealth with life insurance? Because you hear that all the time, like, what's this create wealth thing, right? So whole life insurance is a type of permanent life insurance policy that goes for your whole life, right? So that means for some carriers that will end at age 90. For some insurance carriers or insurance companies, it stops at age 100. For some companies, it stops at age 120, right? And this policy is the opportunity to build cash through the cash value of the policy, in addition to having a death benefit, right? And so you make monthly payments, and these are level premiums most of the time. What that means is, now it depends on who you're getting your insurance through, but when you work with us here at Fusion Insurance Group, we only sell policies that stay the same. We don't like that funny math for customers where all of a sudden they didn't realize they were getting a renewable product, and every certain number of years the policy premiums change every month. So these are fixed premium policy contracts that our clients can have and can access cash in the policy. And so a level premium means that your premium does not change, right? That means that if you're paying $45 a month, this $45 a month until you're 90, $45 a month until you're 100, $45 a month until you're 120, just depends on the insurance carrier, right? The only way that premium amount changes is if you let the policy lapse and you have to get a new policy. And let's say you go to get that new policy after you've had a birthday, you're not gonna be paying that same amount. So that's why it's so important to, once you get a policy, to keep it. Okay, so these are the things that a whole life policy guarantees. It's guaranteed for life, right? As long as you keep making the premium payments, you're going to have that policy for your whole life. This can be a children's whole life, which goes from age 14 days to 18 years old. This could be an adult whole life policy, which the ages may vary depending on the type of whole life. And then there's a final expense whole life policy that normally starts at age 55 and goes up until the ages we talked about. These policies build cash value, right? These policies also, depending on the type, will allow you to receive dividends. Not all whole life products have dividends. Some of them do. And then this policy gives you the opportunity to borrow money from the policy. In other words, you can do a loan from your own insurance policy. So let's say you have this $10,000 insurance policy and there's $2,000 inside the policy, and you're like, I need access to some money. Guess what? Instead of going to the bank and them looking at your credit, you can borrow from your own life insurance policy. And so you can contact the insurance company and say, listen, I see that I have $2,000 in my policy. I would like to access that money. You borrow your own money at a low interest rate, and you can pay it back, or you don't have to pay it back. But if in some cases, if you don't pay it back, it does decrease from the face value of the policy, meaning the amount you have at the time of death, okay? You have the ability to borrow, and then you can use that money for whatever you want. The insurance company isn't saying, well, you can borrow it, but you can only use it for this. You can take money out of that insurance policy to use to buy an asset, whether that's land, whether it's a down payment on a home, whether it's college education, whether it's a down payment on a car. You can use the cash value in that policy to do so. So it creates a cash asset. Now, the other thing that's important to know about a whole life policy is that you can get a policy on someone if you have insurable interest on them, right? So a blood family member, a cousin, an aunt, an uncle, a mom, a dad, right? You can also, depending on the insurance company, get it on adopted children and or stepchildren, but there's parameters around it. But someone that you have an insurable interest in. And this is an excellent way for you to begin to grow wealth. And so when people say, well, how is it wealth? Well, because you can create your own cash asset. Now, normally Sometimes it can take 2 years, up to 24 months for you to start to see the cash value in the policy, unless you front load the policy. And we'll talk about that. That's a different product called an Index Universal Life, where you can put money into it, and that's not whole life. So we're not going to talk about that today. But with the whole life policy, let's recap. It goes your whole life. You're not going to outlive this policy. That's such a blessing to know. That's important to note. It builds cash value. So that means that at some point you can choose to borrow from that policy. You're borrowing from your own money and not from the bank, and you can use it for whatever you want. And then there are some whole life policies and products that pay dividends. That means that you're actually getting paid money from your policy. You can get a whole life policy on a 14-day-old baby all the way up to an 18-year-old with the children's policies. Sorry, I'm trying to hang up my phone. In addition to that, you can do whole life when you're a certain age and it goes the whole life, or you can do final expense whole life that starts at 55 or 45 for some companies and goes all the way to 100, 120. This is a powerful product. So I want you to give me a call if you're interested in learning more about the whole life products. My number is I'm Garlinda Price, and I'm the owner of Fusion Insurance Group, and my number is 910-494-7798. Also, we would be honored to put your first policy on your new baby, your new grandbaby. Remember back in the day, and some of you may be too young to remember, but how grandparents and aunts and uncles used to give savings bonds, or they used to give silver dollars, or they used to give 50-cent pieces, or they used to give $2 bills. This is that. So now getting a whole life insurance policy on a child, on a baby, giving it to them as a gift when they're young, this is that. This is how you begin to create wealth, and you give them something tangible that they can use, that it can bless them later on in life. And let's say they decide not to keep it and they get old enough and they want to surrender it. They get to keep the cash value. They sign a document, send it in to the insurance company. 4 to 6 weeks later, the insurance company sends them a check, and they can use that policy for however they want. And the last thing I'll share with you is it's so important to get policies on your children when they're young. Why? It guarantees their insurability in the event of a childhood illness. A lot of times people don't think, nobody wants to think about a child getting sick, right? But sometimes it happens, and depending on what that childhood illness is, it could prevent them from being able to get insurance that's not graded, right? Or has a wait period, or it might get them declined with most carriers. So if you think about getting it now while they're young and it's so inexpensive, you don't have to worry about that. But also it'll guarantee their insurability. So let's say that they have a policy with this company, and now when they get older they want to add to that policy. The company won't turn them down because they already had a policy. So that means now they don't even have to go through the health check or the health questions to add to that policy, depending on the type of what it is. And then when you see, and this is going to sound kind of morbid, but the actuaries at different insurance companies do say that most accidents happen when people are between 18 and 40 or 18 and 45. So it's important to have a policy. Better to have it and not need it than need it and not have it, right? And then a lot of these policies can have living benefits. That means that if you got a critical, chronic, or terminal illness, you can tap into that policy if you need it because you're not able to work. And then that way you could use money from that policy, like we talked about, because it built cash value in order to pay for those things. So anyway, I'd love to educate you. I'd love to be your insurance agent for life. Give me a call at 910-494-7798, and we're licensed across the country, so we can help you. Give us a call.